Hey, what's going on, guys? This is Daniel.
And this is Sam.
And we are the Quack Brothers. And in this video, we're going to talk about how Zillow lost $381 million last quarter alone, along with slashing 8,000 people in their workforce, along with having thousands of homes in their inventory. Exactly how much, Sam?
Yeah, 9,800 homes were bought by Zillow with the plan of fixing it and flipping it. And what they're really hoping for was delivering an online virtual home buying service called the iBuyer. And unfortunately, it didn't pan out so well, and Zillow just called it quits last week, and their stock slumped by 25%, which Kathy Wood bought the previous day, and it dumped everything the next day on Wednesday. So that's gotta hurt. A lot of you guys are asking, is this a sign of a market crash? Does Zillow know something that we don't? Is this a sign of what could come next few months of a market crash? So we're gonna go answer that question, what we think about what's gonna happen in the housing market. Of course, we're gonna give you some more insights as far as what Zillow is doing and what they probably will plan on doing for the next few months as well. Now, real quick, guys, before we get into the data and the facts, be sure to subscribe to our channel. We're all about the housing market, making money through real estate, all through the context of freedom and giving you guys the financial literacy.
So long story short, Zillow decided to get into the fix and flip game, and they saw a rising hot housing market and decided to get in, and they bought 9,800, which I'm sure is a lot more than that, but 9,800 houses hoping to fix and flip it. And of course, they use the Zestimate to figure out whether or not they wanted to buy the house or not. And many people were saying, oh, we have nothing to worry about. Zillow's gonna make tons of money. This is the future of real estate because they're buying all these homes in neighborhoods that are safe, and all these states that are rising in population. It's all gonna be okay.
Well, the problem was that they were overpaying for much of these, and it has to do with their Zestimate algorithm, which, by the way, if you're a real estate investor like us, we already, like any beginner real estate investor should understand that the Zestimate is nowhere near accurate. Nowhere near accurate. You should not be relying on Zestimate at all. And here they are, Zillow, with 9 figures of funding and budget to be able to go out and buy houses and fix and flip them. We're relying on a inaccurate algorithm, their own algorithm, thinking that it was good, and they flopped. And in many cases, they were paying over the asking price as much as 10 to 20% in addition to the selling price.
Which, by the way, if you're watching this video and you're an individual that, hey, one day I want to have a rental property, one day I want to have a 4-unit and have a portfolio so I can pass it down to my kids, well, this is great news for you, because it just shows that, hey, no matter how much money you have, no matter how many resources you have, or how many algorithms and thousands of people in R&D, it doesn't matter unless you learn the fundamentals of real estate investing, meaning that you will probably do better than Zillow.
So with Zillow quitting, what's the ultimate outcome? Well, now they're looking to dump all 9,800 properties back into the market. But the problem is they're not going to just dump it into the market. They're looking to sell it to other private equity firms, REITs, real estate investment trusts. They're looking to sell this to hedge fund companies. So they're not even necessarily going to do the public a justice by putting it back in the market, right? By helping consumers out there. What they're wanting to do is they're going to sell it to another PE firm, which essentially means that no one's going to be able to see all 9,800
properties. Which I am highly skeptical, because for me, it's, and we run a PE firm. It's like you're not really going to have a firm or a REIT who has sophisticated investors running those organizations overpay for these types of properties. If anything, they're going to be waiting on the sidelines, holding cash so that one day they could buy the same properties with a big portfolio from a bank as opposed to from an institution like
which
Zillow.
Is highly it's going to be highly undervalued. It's exactly discounted, right? Not from Zillow. But let's think about the opposite. Like, even if they did dump all 9,800 properties back into the market, it's on the MLS, it's available for the general public, it's not going to do a whole lot of help either, because just last month alone, the market introduced only 84,000 new listings. And if, let's say, Zillow dumps 9,800 properties into the market, that's only 11% of what last month's inventory looked like as a one-time event. So Zillow really won't help out with the national inventory crisis, even if they dumped all 9,800 properties back into the market.
Well, let's also talk about this too, because Zillow has said multiple times that these are great neighborhoods, they're great markets where the values are going to continue to increase, and now they're dumping them. So what happened to all that data? What happened to the facts that they said of how, hey, these houses are on the rise and it's all good? It kind of sounds, if anything, like they didn't have the margin to be able to fix and flip and sell these properties again in the same market. So therefore, they're going to release them back into the inventory, which, by the way, one of the facts that they mentioned as well is that, hey, there's, millennials, the largest generation, they're going to enter the housing market. And then Gen Z is an even bigger generation. We're optimistic about the future.
Got him! I mean, which in a way, it's true. The millennials and Gen Z does want to enter the market. So I don't think it's the housing market to blame. I think it's Zillow. I think Zillow just was flat out incompetent, and they just relied on bad data. So let's talk about the cause. Like, what what led to Zillow's demise? What led them to fail? So first of all, they relied on shanty algorithm. I mean, the algorithm just sucks, right? Zestimate has a reputation of not being reliable, even in the beginner investor community. So I don't know why they went with their own algorithm. I guess they drank their own Kool-Aid, which really was rat poison at this point, and they just died. Now, Zillow also points to the fact that labor and supply shortage was one of the leading causes as to why their contractors couldn't make it to their properties in time, which I'd say it was legitimate. I'd say that's definitely one of the leading causes.
Well, but here's the thing. If you're going to blame the labor shortage and also the supply shortage, well, why are you using that reason in a market where supposedly the values are going up higher and higher every single month? So if anything, shouldn't that be helping you? Isn't it in your incentive to hold these properties for longer?
So ultimately, what does this mean for the housing market for the next 3 months, 6 months, or even 12 months looking out to 2022?
Okay, so here's my opinion. And well, let's look at the facts here, right? Because if it is true, if Zillow is indeed leaving the housing market because they believe that in some mega crash that's going to be coming and they're extremely bearish, well, why are they staying in the real estate game? Because supposedly Zillow is launching what's known as Zillow 360, which they cover home lending, title, and other services that are ancillary to real estate. So if they truly believe that the housing market is going to crash, well, why are they the ones being the lender? That's kind of like saying, hey, I don't believe in this 8-unit deal, but I'll just put money in it, and as opposed to me doing the deal.
And I'll give you my perspective as far as, did the chicken come first or the egg come first? Because a lot of times people are saying, well, it's companies like Zillow, Blackrock buying, and that's shoving all the, American homeowners, that's causing the housing boom, and that's the blame. Well, guys, again, even if Zillow bought 9,800 properties and last month alone, we introduced 84,000 new listings, that's only 11% of what they're buying at a one-time event. And that's just only the major metropolitan areas. And even companies like BlackRock buying neighborhoods, that only constitute as 1 or 2% of the entire nation's inventory in the housing market. So I don't necessarily think that Zillow or BlackRock, some of these big companies, are the leading cause as to why the housing market boom is happening in the first place. Nor do I think they could be the cause of a housing market just because they dumped a bunch of inventory back into the market.
Now, at this point, I know a lot of you guys are saying, well, that's why the supply is so short, because institutions like BlackRock and Zillow and these firms are buying up properties left and right. Well, let me remind you that the home ownership rate in the United States is as high as it was in 2005 and 2006.
Absolutely.
Now, I will give you this, because when you're talking about a 68, 69% home ownership, which during market highs, that tends to be the rate. Well, do those home ownership rates include people buying other properties, a second or third home, so they can put it on Airbnb? Does that include the fact that, hey, Mr. and Mrs. Johnson, who's 68 years old, who usually during that age range would sell their home to a younger couple, well, now they decided, hey, we can put this out in the market and get more rent than we've gotten ever before. We can put it out on a platform like VRBO and Airbnb and make money and supplement our retirement income. Because as we all know, Social Security is gone in 10 years.
I ain't got time for that shit.
And guys, let me remind you, big companies like BlackRock, Zillow, Fundrise, all these companies buying up properties, this isn't anything new. I mean, this has been going around for the last 10, even 15 years. The fact that they're highlighting it now is because of the housing shortage, and it just seems like these big companies have to do something with the housing boom. Now, the real reason why I believe that the housing boom is happening, and we believe that housing market will continue to stay warm, or if not hot, for the next 5 years, mainly because of the fact that it's supply shortage overall. Let me remind you guys, and we've talked about this in several videos in the past, that right now we're in need of 10 million new housing units. 10 million. Yet in the last 10 years, we only built approximately 5 million housing units. So what does that mean? Well, for the next 5 years, we're going to continue to run a shortage of not enough housing for everybody. Plus, we're introducing Generation Z, the millennials, wanting to buy homes. So I think the main leading cause to why we're seeing a housing boom is just there's demand, just not enough supply.
Well, I don't know. I mean, I will kind of disagree with that because, well, let's think about why the supply shortage is actually happening right now. Well, it's because after 2009, the lending industry completely froze. As a matter of fact, we're supposed to have a minimum number of housing built every single year to keep up with demand that's constantly coming and going. So with that fact, it just so happens that capital is cheap enough and rates are cheap and money is cheap enough for individuals to finally start getting into home ownership. Well, it just so happens that the problem that we faced 10 years ago is finally catching up to us. So in my opinion, as long as supply shortages stop and developers continue to build, well, I could see a scenario where it could stabilize, but I think everything hangs on the question of, well, what does the millennial generation and the older Gen Z crowd want to do? Is their appetite more so for renting? Is it more so for home ownership? in my opinion, I think the best strategy moving forward in the next 3 to 5 years is actually going to be townhomes with an apartment-like community. And I think that's actually going to pretty much answer everything that our generation and the generation to come will absolutely want.
Well, hold on, Daniel. So that goes back to another question of, what came first, right? Is it because lending got easier recently that the demand has caught up? Or is it based on the fact that after 2008, 2009, a lot of developers went home, they never came back, and pretty much everyone's appetite for new development has slowed down for the last 10 years. So yeah, I do in a way agree that demand has caught up, but I think the real problem is that a lot of developers have kind of got shell-shocked because of 2008, and that kind of lingered on for the next, last 5 to 10 years, and there isn't enough new building and new development happening, so it's a combination of both, right? So I don't know what you guys think about it. Is it more of a demand catching up, or is it just we just haven't built enough homes in the last 10 years that is leading to the cause of what we're facing right now? So go and comment down below. We'll love to hear your thoughts.
Real quick, I mean, to answer your question, I mean, it's pretty obvious, right? I mean, the shortage came first in 2009. So honestly, the lack of supply isn't exposed until demand is realized. So what happened is there was a lack of supply because of what happened in 2008 and 2009. It wasn't that there was a labor shortage. It wasn't that there was a supply shortage. Yeah. Look at the cost of lumber, steel, and look at the cost of labor in 2009. It was at all-time lows.
Yeah.
So it's definitely not that, but it's more so of the fact that the lending stopped and people were shell-shocked. And because of that supply, well, it only takes a matter of time before demand gets so high. And I'm saying the reason why demand is so high is because the money is so cheap.
Yes.
Remember,
phantom appreciation.
For a lot of individuals, just because it's there, they use it every single time. Yeah. So in my opinion, the supply came first and then the demand exposed the supply. But yes, please let us know in your comments below. Who do you agree with, Sam or Daniel? And to kind of finish off the video, I believe in terms of Zillow and how it's going to affect the housing market, well, in my opinion, it absolutely does nothing. Right? Actually, Zillow doesn't affect the housing market whatsoever because at the end of the day, it is true. They bought homes.
In terms of what they were doing in terms of fix and flip, I think there is going to be another way that Zillow is going to affect the market pretty soon. We'll tell you more about it in future videos. But until then, subscribe. Right? Make sure you like the video. Right? Any last
absolutely.
thoughts?
Yeah, I would say it's just a final thought. I disagree with even what you just said right there because Zillow, if anything, right now they're playing it safe. They're doing the ancillary strategies such as lending, title, right? That's got, hey, let's just run with the river all over it.
And I'm not saying they're going to continue with the fix and flip market.
No,
I think they're going to
stay.
They're going to quit that job.
So they're not going to affect the market whatsoever. Yeah, they're not. I mean, what they did means absolutely nothing. They're going to, if anything, go home, hide under their covers, and make money where they can. The low-hanging fruit. So with that said, guys, thank you for watching. I'll see you guys in the next one.